Welcome back, the Mike and Mike Mortgage Show. We know there are closing costs associated with buying a home. There's title closing costs and mortgage closing costs. Mike, what is entwined in those mortgage closing costs? What all does that encompass?
Yep, so every lender is going to be slightly different, but you're going to see the same basic mortgage or lender fees. You're generally going to see some type of an underwriting fee, a processing fee. You might see other little fees like a flood cert or a tax cert or things like that. But the main ones are usually an underwriting and a processing fee. You're going to also need to remember you have to pay for an appraisal. Almost all loans require an appraisal, and you're almost always going to have some type of a credit report fee too, because you got to have a credit report done on all loans.
Okay, now some lenders make you pay out of pocket for that appraisal, and some let you pay at closing, correct?
Correct.
Like,
Yep.
I think you guys do
So most lenders are going to make you pay that up front.
Okay.
We don't necessarily do that.
Okay.
We might take a credit card number down and hold it, and then especially if the sellers are paying your fees for you, why would I want you to pay that to me when the seller's really going to pay it at closing?
Right.
So, we are a lot more lenient with that than a lot of lenders are, but in most cases, you do need to be ready to pay that if they require that. The other fee that comes into play every now and then are discount points. So these are optional, and they're used if you want to maybe pay extra money or called buying down the interest rate. So if you have all your normal standard closing costs, it's going to be the same on every loan. But then you talk to your lender and say, hey, can I pay a little bit extra money and get a better interest rate? That's always going to be an option, and you just got to talk to your lender and see if it's worth paying those or not.
Okay. Excellent. Thanks a lot, Mike.
No problem.